The big banks are saying you can ignore the stock market volatility. There's no recession ahead. Let me read you what Yahoo Finance said about this quote. Many banks say that their consumers and customers were still spending money. Defaults were still manageable, and businesses were not experiencing distress despite the uncertainty about the months ahead. Where are they getting this data? Well, over the last couple of weeks, many big banks reported their earnings statements, and we saw a very common theme. Big banks are seeing record profits. They said that Americans are still spending money like crazy, and they're not seeing a ton of defaults. I'll show you. This is what HSBC said, quote, "The message has really been from other banks that the sky is not falling." Here's what Bank of America said. Client concerns over trade policy, meaning tariffs, and recent market turmoil has grown, which we've seen over the last couple of weeks. But still, our research team at Bank of America at this point does not believe that we will see a recession. And our clients continue to show encouraging signs because employment is obviously healthy and consumers have proven resilient, meaning despite inflation, despite the concerns about the economy, despite the market volatility, Americans are still spending money like crazy. That's what it means when they say consumers have proven resilient. But then Bank of America went on to say even more. The CEO of Bank of America said the United States consumers, quote, keep pushing money into the economy, and that their business clients, quote, remain profitable, liquid, and have strong results. But of course, quote, nobody has a perfect crystal ball. What does that mean? Our economic system runs on spending, and nobody knows the spending like the banks. Because banks love it when you spend money, and even more than that, they love it when you spend money that you don't have, because where do you go to get that money? None other than the banks. And the banks know that people like spending money and that businesses like spending money, and they profit from that because they continue to lend you money. And what they're saying is lending is up. So when you hear that banks' profitability is rising, which over the last few weeks, what we saw is that many of the big banks in America and really around the world reported record profits. Well, what does that mean? It could mean that there's some investment banking profits rise, but what we also saw is that consumer spending, consumer lending profits are still high because Americans have been spending money that they don't have. But what does that mean in the long run? It means that Americans keep spending money they don't have, and they may eventually hit a breaking point, because you can keep borrowing money until you can't pay it back, right? There's nothing wrong with borrowing money, at least that's what they say, as long as you can pay it back. But if you keep borrowing more money and you keep borrowing more money, eventually you're going to hit a breaking point. And this is where the banks are saying we are not at that breaking point. You don't have anything to worry about. Bank of America says that there's no recession coming. And many of the other banks say that the economy is looking strong, unemployment is strong, and consumers keep spending money like crazy. And the reason why banks are saying that it looks like our economy is growing is because many people are hoping that wage growth is going to grow faster than inflation. And they're hoping that this will correct for all the price growth that we have seen over the last 5 years. Now, we've been breaking all this down in Market Briefs. Again, Market Briefs is my free financial newsletter where my team at Briefs Media breaks down what's happening in things like the economy, the stock market, the housing market, the crypto market, and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every single day. Plus, when you join Market Briefs, you'll also get access to our free investing masterclass just for joining Market Briefs. So if you want to get the free newsletter and the free investing masterclass, I have the link for you to join down in the description below. So what we've seen over the last, we'll call it about 5 years, is that inflation has outpaced the average person's wage growth. What does that mean? Inflation has been around 23% over the last 5 years, while the median American's income has gone up by around 20%. Does that mean that everybody's income went up by 20%? No. Some people saw more growth, some people saw less growth, but on average, what we saw is that the average American did not see their incomes rise fast enough to keep up with inflation, which means you saw a raise over the last 5 years, but you're effectively poorer today than you were 5 years ago. Why? Because more of your salary is being used to pay for your housing, more of your salary is being used to pay for your groceries, more of your salary is being used to pay for your electricity and your auto insurance and your health insurance and everything else, which means you have less money left over to save and invest. That's what we've seen. Well, if that's the case, how do people keep spending money? How is the consumer still resilient? Well, the way that people keep spending money is through debt. That's how the banks make their money. They make money when you spend money that you don't have. Well, the banks are saying that all of this is a good thing, and they're saying that Americans are going to continue to be strong and that the economy is going to continue to be strong because we're hoping that wage growth will outpace inflation. Now, I don't know what's going to happen over the next 12 months, so I'm not going to try to predict that, but I want you to understand what the banks are saying and what economists are saying and what the government is saying. We saw over the last few years wage growth not beat inflation, but if 2025, 2026, we see the opposite, where wage growth beats inflation, now the banks are hoping that this means people will have more ability to save, more ability to spend, and even more importantly, more ability to go into debt and spend even more money because you have that extra buying power. We don't know what's ultimately going to happen, but this is where we have one more wrench in the puzzle. If you've been watching my videos or reading market briefs, you understand that there's been a lot of concern about potential tariffs causing inflation to get worse, whether it's for a short period of time or long period of time, we don't know. And that's where there's a lot of uncertainty. And this is where we've also seen a feud between President Donald Trump and the Federal Reserve Bank, because the Federal Reserve Bank is saying we don't want to cut interest rates and stimulate the economy right now because we don't know if tariffs are going to make inflation worse. While President Donald Trump is saying that the Federal Reserve Bank needs to be cutting interest rates more aggressively, kind of like what the European Central Bank is doing, because the European Central Bank has cut interest rates by 7 times in the last year, while the Federal Reserve Bank has only cut interest rates 3 times in the last year. And you can start to see the different dynamics and the different pros and cons here. Because on one hand, we have the economy, which, yeah, it's still strong, but there's a lot of uncertainty if the economy is going to stay strong. There's a lot of uncertainty with what tariffs are going to do to the economy. There's a lot of uncertainty if unemployment is going to rise. There's a lot of uncertainty of what's going to happen with inflation as well. And this is where it's very hard to take a look at what's happening in the economy with a snapshot, because you have to take a look at where the economy is moving. We know that when we hear news about tariffs, markets immediately go down, and a lot of businesses have been pausing their investments because they don't know what's going to happen with tariffs. There's a lot of uncertainty. And because of that, we don't know where the economy is going to grow. In fact, the Federal Reserve Bank has said that they're anticipating that the economy is going to shrink in the first quarter of 2025. Now, I know we're in the second quarter, but it takes a little while for us to get the actual results. And this is where it's very important for you to understand this as an investor, because we're going to get a lot of headlines. Some are going to be scary, some are going to be very exciting, and you want to be able to cut through the noise and find the opportunity, because the reality is nobody knows if we're going to see a recession tomorrow, next quarter, next year, or the next decade. But what we do know is that a recession is coming. I'm not saying this because of who's in office or anything like that. We know this because we can take a look at history. I don't care if you love Donald Trump. I don't care if you hate Donald Trump. My goal is for you to understand the economy. That way you can make the best decisions with your money, so you can take better care of yourself, your family, and your community. Let's take a look at the history of finances in the United States. Over the last 100 years, we have seen more than one recession per decade. In fact, we've seen 16 recessions over the last 100 years in the United States, and we have seen 25 bear markets, 25 stock market crashes in the last 100 years, which means we are averaging more than one recession and more than 2 stock market crashes per decade. So while history doesn't exactly repeat itself, it does rhyme, and we can infer that there will be another recession and there will be another market crash. And we also know, just by looking at history, that next time it happens, most people are going to be blindsided, shocked, they're going to freak out, they're going to panic, and some people are going to get rich. How do I know that? Because we've seen this time and time and time again. Let's just take a look at 2025. When Liberation Day happened on April 2nd, 2025, what did we see happen in the stock market? Markets fell very fast. The S&P 500 entered correction territory and then was right around the bear market territory, falling by around 20% off of its highs. Now, I was making videos talking about how we don't know what's going to happen, but if you're a long-term investor, this is a great time to buy, to start buying, and just understand that you have to be a long-term investor. Well, if you take a look at the comments, what do people say? This is not like before. Markets are going to crash. You don't want to be buying now. I wouldn't touch the stock market now. I'm selling everything. It's a lot of fear. Well, what did we see happen? Things started to stabilize. Now, no one knows what's going to happen tomorrow. We don't know if markets are going to crash tomorrow. We don't know if markets are going to boom tomorrow. But the name of the game is not trying to predict what's going to happen tomorrow. The name of the game is not trying to predict what's going to happen next week. The name of the game is not trying to predict what's going to happen next year. The name of the game is trying to accumulate assets, period, and then own them for the long term, period. So now let's think through this. If the name of the game is owning strong assets and you can just own a piece of the United States economy, assuming you don't want to find individual stocks, when markets go down, they can create buying opportunities. And for the average person, markets going down create fear. It creates anxiety because, oh my God, my 401k is going down. But this is where if you can be smart with your money when times are okay, it creates buying opportunities when times are not okay. And we know that we're going to see volatility. Anytime you hear news that everything is going to be great, you will see something wrong happen. Anytime you hear the news that nothing good is happening, you will eventually see something good. See, I own a financial media company, so I'm going to tell you this. Things are generally never as good as the media makes it seem, and things are also generally never as bad as the media makes it seem. This is one of the reasons why I'm such an advocate for market briefs, because we don't need all the sensationalism. We can put all the news into one newsletter, and it's all there in an unbiased way, versus if you're trying to get clicks, now you have to be a little bit more exciting, a little bit more panic or greed driven, because that's what drives the clicks. I want you to understand the game. And the reason why it's so important when it comes to finances is because now when people read these articles, they make real decisions with their money. And this is what I want you to understand. We don't know what's coming next. Banks see that Americans are still spending money. Banks see that Americans are still borrowing money. We know that there's uncertainty ahead with tariffs. Some people hate them, some people love them. It does not matter. What I want you to understand is what's happening. That way you can cut through the notion and find the opportunity. And this is the part that many people miss. They get caught up in the emotion instead of looking at the opportunity. Because at the end of the day, what's going to help fill your bank account? Is it getting angry? Is it getting excited? Is it leaving angry comments on YouTube and Facebook and Instagram? Or is it looking for the opportunity, being smart with your money, finding the opportunity, and then doing something about it? Now, I will leave that up to you because I can't tell you what to do. I mean, I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But this is the game that I want you to understand. It all starts with you being smart with your money. That way you can find the opportunity. And we don't know what's going to happen in the economy over the next 12 months, but we know that a recession will ultimately come. And when the recession comes, you want to be the person that can find the opportunity, not the person that misses the opportunity and wishes, man, I wish I would have bought when markets crashed in 2025. Or I wish I would have bought when markets crashed in 2022. Or I wish I would have bought when markets crashed in 2020. Or I wish I would have bought when markets crashed in 2008. These things happen. And many people sit on the sidelines, get caught up in the emotion, and they keep missing the opportunities because you're either waiting for the perfect time, or you're trying to time the market, or you have this very pessimistic mindset that you never think that things are going to get better. And generally, it does take time for things to recover. But this is where I want you to understand the game. I don't want you to keep getting caught up in the emotion. You got to understand the game and have a long-term mindset. And long-term means multi-years and multi-decades. We're not talking about the next 6 months because people want an immediate return. And as soon as you see the stock market go down, you feel, man, I just started getting into the stock market. Now my portfolio is down 10%. I'm selling. That's not the way that you win. The way you win is to be a long-term investor, not get caught up in the day-to-day swings. Don't be a trader. Traders lose money over the long term. Traders are gamblers. Don't be a gambler. Be an investor. Look for the opportunities that can allow you to build wealth for the long term, because that's much more steady and it's much more proven. Again, if you want more resources, Market Briefs is a free newsletter. And when you join, you'll also get access to my free investing masterclass as well. And with that, I will see you on YouTube tomorrow.